have the underlying fundamentals changed after the presidential elections, right? So we said that bond rates haven't come down to what it was before. Equity market hasn't gone up to what it was before, right? But is there a change in terms of the fundamentals which kind of rationalize such a change in terms of why the market shouldn't go up or rates shouldn't come down as such, right? So let's look at in terms of policy and what the government and the central bank has been doing in a post-election scenario. Have things changed? From a money printing perspective, the central bank still doesn't print money, even after the elections, even when during the peak in September, when there was a little bit of pressure on the interest rates and so on, we didn't see the central bank printing money to kind of manage its fiscal position, right? And also in a subsequent period, the central bank keeps, or its intention is to reduce its amount of holding of government securities, or not print, or reduce its amount of printing that is there, right? So from a policy perspective, we haven't seen the central bank tilting in terms of or changing their policy in terms of printing as such, right? Second one, from a government's perspective, the government's tax collection still remains strong, right? So a lot of people expected tax collections to slow down in September leading up to the elections and so on. But to be honest, as of September, the IRD, for example, has collected 70% of what it should have collected for the year, and is well in line to hit the target for the year. Similarly, we are also seeing customs is in line to hit the annual target. So more or less, revenue collections have also been strong leading up and in the subsequent periods after the presidential election, right? So we haven't seen the government tilting too much, government and the central bank tilting too much in terms of either fiscal stance and from a policy stance from a central bank, where they are looking at funding the budget deficit through printing. So that is continuing even in this political regime, right? So there are few things which have been imposed by the previous government, or the acts which were brought in last 2 years subsequent to the IMF program that we entered to. There were few acts which were that came in, which kind of restricts any government to do too many changes in terms of public finance management or central bank policy, right? Now, because of these control measures being in place, even the new government or the central bank in power cannot make major changes to whatever that was happening in the last 2 years, right? Or the policies that they were adopting in the last 2 years. For example, the Central Bank Act, which came in 2023, ensured that the independence of the central bank is maintained, monetary printing is prohibited, right? And that Sri Lanka follows an inflation targeting framework, right? And we see the current government is also kind of in line or favorable to this, where they are saying that there will be no printing and they will follow the Central Bank Act, right? And from a Public Finance Management Act, right? The Public Financial Management Act capped how much expenses that can be made by the government on a recurring basis, right? So primary expenses were capped at 13%, right? And any government guaranteed debt was capped at 7.5%, right? Similarly, the Economic Transformation Bill, right, set targets in terms of how much debt to GDP that we need to work with, which is in line with IMF targets and so on, right? So these broad acts which have been brought in restricts any new government or central bank to make drastic changes in terms of policy, right? So unless otherwise the government goes and changes the acts with a 51% majority, you won't see a lot of these policies which are in place going to change, right? So question is, if the government is not going to do major fiscal slippage, or central bank is not going to go is not going to take a very accommodative stance by printing and so on, right? Is there a requirement where market should panic and risk should increase as such, right? So our view is no, right? Because more or less most of the policies are in place, right? So you haven't seen any change in terms of the underlying policy framework, right? So basically it's a continuation of the existing policies with the IMF framework in place, right? So in that case, what we can expect is that markets will take it positively going into a post-election scenario. Also, the government, new government which has come into power, has been very clear that their commitment to the IMF program will continue. Right now, when they say that their commitment to the IMF program will continue, that means that they are going to stick to the main target stipulated by the IMF. Right? When you say main target, a 2.3% primary surplus, which is your revenue minus cost, debt to GDP being brought down to 95%, gross financing needs falling below 13%. And also your sub-targets in terms of hitting a government revenue to GDP target of 15%, following a cost-reflective energy pricing formula, flexible exchange rates, completion of EDR. So the broad targets are still in place. Right? So when the government gives a commitment to the IMF, this means that these targets will be still in place. Right? But where the government can tilt the equation a bit is by cutting down on certain expenses and so on, right? But giving something on the other side to the low end of the population and so on, right? So you can make minor twists within the overall equation, but you should still hit your overall targets. So the overall targets won't change, but how you hit those targets can change by the government deciding on if they want to introduce a different tax and give a subsidy to something else. Right? So the overall framework still remains the same. How you achieve it can be tilted a bit by the government. Right? So which is what this government is most likely to do, which is tilting the equation of how to achieve these targets without changing the overall targets as such. Right? So also we saw a lot of promises given by the government just before the elections, presidential elections. We saw some of them have been already implemented. For example, a pension allowance of 3,000 rupees, a fertilizer and fuel subsidy which was given, which totally cost about 45 billion rupees. And the one spending from their manifesto is increasing the pay threshold to 200K, which will be a loss of about 60 billion rupees in terms of revenue to the government. Removal of VAT on essential items, which is about a 10 billion hit. And also a minimum financial grant of 10,000 rupees to low-income families, which will cost about 171 billion rupees. Right? But the government has not clearly said that whether Aswasuma program will be taken out and it will be replaced by this. If so, that increase will also be very minimal.